Hello traders, Damien here. I want to make this short video on Fibonacci retracements and Fibonacci extensions and some harmonic projections. Okay, for all intents and purposes, and to keep this video nice and short, let's pretend that the beginning of time is here and this is where we are right now, and that this represents a long or short time span. It doesn't matter, but there's a lot of price action here that we can use to help us on an immediate scale from a harmonic standpoint, and more of a longer term projection as we look for targets and extended targets. Okay, it's important to understand that the market does not move in straight lines, and it's also important to understand that the market seeks symmetry. Okay, that symmetry is what we call harmonics. Okay, ABCD patterns. Sometimes there's other advanced patterns like Garley's bats and things of that nature. The scope of this video is not to identify the bats and the Garleys or anything along those lines. It's more or less staying true to the simplest nature of price action movement, which is ABCD patterns. That is what we look to capitalize on. That is the bread and butter, and occasionally we do have the other patterns that add confluence and value to our high probability setups. But for right now, we can see that the market started here, had a movement here, okay, and we don't have anything completed yet, so we can't say that an expectation has failed or anything along those lines. We have a clear high and a clear low. This is the beginning of time, okay, and until price breaks above or below this low or this high, price is in a complex correction depending on what it does in here. Now price has made a new structure high. Price closed above the previous high, so this is a new structure high. So immediately, what are we expecting? Well, we would expect, since we got a weak projection from here, okay, we would expect a deep correction, okay, and then another what? New structure high. That's what the market produced, so that would be the expectation, okay. So now when we say that the market is expected to make a deep correction, we must first have a qualifying correction to qualify that as a main swing. What I mean by that is, if I draw a swing, if I draw a ratio from that low or that high and I get a 38% correction, now nobody can change the fact that this is now my main swing. Okay, that etched this main swing in stone. So once we have a proper correction, that main swing is etched in stone, and nothing and no one can change that. Okay, so now we would expect an overall, because since we got this is the high, remember we had a qualifying correction, so there cannot be any higher point than this off of this main swing. Okay, this swing died the moment it hit the 38% and it turned into a main swing. Okay, once we do that, now we can have a basic understanding of what kind of a new structure high we got, what meaning projection wise. We can now look at the momentum, okay, with more clarity, because we have something that's etched in stone. Okay, and we would expect off of a weak projection, relatively complex price action to the upside, which is also kind of a sign of weakness, and a momentum that's not all that impressive, we would expect a deep correction from this, right? Because we have three things that are telling us that there is weakness to the upside. Those three things are what? Weak projection, okay, weak momentum, and complex price action to the upside. Okay, so all those things would tell us that we should expect a deep correction, that there is weakness to the upside. Okay, now as price comes down and touched this area here, price came down, found a little bit of support here, to then find some more resistance here where the sellers were, okay, and then found some more support here. Okay, so it's important to understand that price moves to and from areas of structure. That's why it's always important for me to say where are the buyers, where are the sellers, okay, because those areas are expected to be defended to some extent, okay, unless there is just no money there. Okay, but that doesn't mean that because something's going to be defended is that is going to hold, or just because somebody's supposed to defend something doesn't mean it's not going to fail. Okay, we expect areas of support or resistance to hold unless they're approached with a lot of strength. Okay, I also expect any area of support or resistance to fail if the expectation puts price past that area. Okay, I would expect that area to fail. Okay, but that doesn't mean that it cannot hold temporarily, and then you're not going to get a correction from there, and then price ultimately is going to follow the expectation, because we know the expectation has a 70% chance or better of playing out on most days. Then you would have to understand that that area of support or resistance that lies in the path of that expectation has a probably a 70% chance or greater of failing as well. Okay, and that is why I say that. Okay, so now let's look from a harmonic standpoint. What do we have? Okay, well, now we have a complex pricing. We expect a new structure high. So now we have a complex correction to the upside. And we say, okay, Damien, you know, how do we use ratios? How do we use ratio extensions to help me find confluence, to help me find some targets? Okay, and now we have price action coming here, coming down here, coming up. Okay, so if nothing puts you in a trade here, which nothing should put you in a trade here unless you're looking for a complex correction and then you know, A, B, C, D to the upside, and then price getting short of also some structure that goes against the expectation, I wouldn't be doing that. But let's just say that your trade is looking for a long, and you know you're in a complex correction, and you're looking for better risk reward. What are some of the tools that you can deploy to help you make that decision as to where you're looking to get long? Okay. And if we draw a line here, we have a clear high, clear low, right? And we have a little, you know, complex price action here that goes to the upside also. But this is not a big deal. So this is what we want to project forward, looking for that confluence into an area of structure, right? We can also draw the extensions to help us find some of that confluence, okay? And we see that the 127 extension is here. So first of all, what are harmonic, ratio extensions? Ratio extensions are nothing more than possible exhaustion points, okay? These are areas where the market should find ratio exhaustion. You hear me say the term a lot. You know, we're in an area of exhaustion. That means ratio exhaustion, excuse me. Okay, just like on the Fibonacci retracements, these are retracement values where price may find some support on the way up. Okay, likewise on the extension, these are areas where the market would tend to find some exhaustion. Okay, and that exhaustion tends to play out pretty often. That you usually get some sort of a correction somewhere between the 127, the 138, and actually Scott made a recommendation. He told me that that the 1414 has greater value, so I may be switching my my ratios to the 1414. It's actually very close by. It's not much of a difference, but I am going to be doing a little bit of testing on that 1414. But just to tell you that that's where you would find some confluence in price moving and finding that opportunity to get long there. In this case, the expectation failed and price moved down. Okay, so now we have to ask ourselves, okay, where is our main swing going down, right? We have price action coming here that didn't make a new structure low. Price came up, made a weak new structure low, came up, made another new structure low, came up, made a new structure low. But this is shorter term order flow, okay? Because until this breaks here, we don't have an expectation failure on the main swing. Very important for you guys to understand that, okay? But however, let's now readjust, or let me not use the word readjust, but let's pretend now the market started here and we had this low here, and now we're looking for a correction and then an extension, okay? So let's draw this swing right here and say this is a clear swing, right? Proper correction. So now this is my main swing, right? It's etched in stone. Nobody can change that, okay? I can also now take my extensions and project them forward, because what is my expectation? My expectation is for a new structure low. Okay, as price reaches ratio exhaustion, you can see price gets close to this 127 and wants to correct. Price gets to the 138, wants to correct. Price gets down into the deeper levels, it wants to correct. Okay, but this is the main swing, and projecting this forward, the profit target of this area is right here. See, surprise, surprise. Okay, so when we say that we have a one-to-one risk reward, meaning the one-to-one is not here. The one-to-one is always here. We're always going to target a one-to-one, okay? But if this is, you know, unless you're entering here to get down there, which is completely unrealistic, then your risk reward sucks. Okay, now I like to have preferably a 1-to-1 to my break even point. So if I'm entering somewhere near the 50% and my break even is here and my risk is here, I have a 1-to-1 to my break even. That's amazing, because anything beyond that is what? More than a 1-to-1 risk reward. Okay, where that falls into jeopardy is when we start looking for trades around the 38%, which is a minimum requirement for me, and that's why I like to have at least that. Okay, but we're always targeting a 1-to-1 or the 127, whichever occurs first. Okay, so now we know that price got here and can produce a proper correction. We also have what? Little tiny price actions that come to the downside. That's what we were targeting. Okay, but we can see that this made a very small new structural low, right? And we did have what? A proper correction, right? Off of that also. So let's draw these out as well. Okay, do we have a proper correction? Yes, we do, right? Do we have a proper do we have anything that we can project forward? Sorry, I'm gonna press F9, it stops the recording. Let's make this fat. You see, even on a micro scale, it doesn't matter. You can use these things very precisely to project possible targets, possible areas of correction, possible areas of profit target. As you can see, price comes down, makes a very precise 127 and a 1-to-1. So this is a very nice signal if you wanted to what? Go against that, right? For the correction, because you're trading the correction here. Okay, but let's not talk about that right now. Let's just talk about ratios and extensions and harmonic projections. Okay, remember we have two harmonic order flows working in harmony. We have the longer term, so we have price working towards completing here, and we have this micro price action that's doing what? The same thing. So we have another ratio that we can draw here. Okay, proper correction, main swing, no one can take that away. Okay, ratio extensions, let's find the exhaustion point of that smaller, shorter term order flow. Okay, let's do that right here. Surprise, surprise. Okay, projection. Again, you see how you can use this very effectively and very efficiently. So now we have two situations here. Okay, two situations. Actually, we have three. We can project a lot of these even further to the side, right? Because this also had a proper correction to this clear high and low, right? 50%. Okay, can I project that forward? Yes, I can. See just how amazing that works out and how you can use this. And just don't be afraid to project lines. The more confluence you have, the better it is. Okay, now here we came a little short, but eventually price did what? Look at that, and tried to correct. Okay, so to answer your question is, don't be afraid to project, don't be afraid to move forward, but you have to work off of main swings, and the only thing that qualifies a main swing is a 38% retracements. And once you get that, then you can etch that in stone, and you can project multiple swings as long as you have clear highs and you have a clear correction to the 38% of that clear low and high, like you just saw me do here. Okay, and now let's forget about this. As you can see, very accurate stuff. Okay, so now let's just keep moving forward on the smaller order flow, because since we have more frequency of that, we can just step back away from that and show you the power of how often these things happen, and that's why they're so valuable. Okay, I'm doing this for just academics. Pure 100% correction, right? I mean, not 100%, but clearly it went above the 38% with a series of complex corrections. Now let me ask you a question. Once you're in a complex correction, could you use that 127 extension to help you find out where you are likely to possibly have a good risk reward immediate order flow exhaustion area to engage. Oops. All right, we'll fix that here. Just about, huh? Almost. Okay. So nonetheless, we're moving to the downside now. So now let's project our where do we come? We also had some other harmonics that came into play there, right? Where's the 127? Let's find out. The 127 was not reached to here. So this is where I say, you know, I like to trail at the 127 or the 1-to-1, whichever comes first, because those are two very strong exhaustion points where price tends to correct from. One, because the market strives for symmetry. We see it over and over and over and over again. And the other thing is the market does respect ratio extensions and ratio corrections, retracements, I should say. Okay, these are things that just tend to happen over and over and over again. Okay, so here we didn't quite get to the 127. We did get to the 1-to-1. So now we can delete that, move it on down, move it on down. All right, this is the clear high, this is the clear low. We have a 50% correction. We can take this and extend it just a little bit to be more precise on there. Push that down. Where do we come in? Okay, where's the ratio? Where's the extension points? Fibonacci extension. We want to find ratio exhaustion. Where is this market exhausted rate from a ratio standpoint, and from a harmonic standpoint? We have a nice area of confluence here, nice pattern completion, and we can then look for a possible long here. But you're not looking for a long with the sense of what? A reversal. You're looking for a long here with a sense of a harmonic pattern completion, and because of that you have a ratio and a harmonic exhaustion area, which will tend to make price correct a little deeper, has more of a corrective value. You would expect a deeper correction from this. Okay, and because of that, okay, you could expect to target the 61.8 of the pattern, which is right here, because this is the A, B, C, D, and then you would enter somewhere over here at the completion point with a rotation. Your break-even point is here, and your profit target is here. Okay, you can either choose to take a hard target there, or you can trail on decision candle, or however you choose to trail. So that's it, guys. If you want more than this, let me know. I think it was pretty clear. I think the information was presented well. I think you got to see how we draw ratios correctly. I think you got to see how you draw extension properly. I think you understand now what Fibonacci extensions means. They're areas of ratio exhaustion where price would have a high probability of correcting. Okay, same thing on the Fibonacci retracements. Those are areas where price may correct to and find some support or resistance depending on which direction price is moving. You got to see some harmonic line projections and how to extend them forward, how to find other areas of other types of harmonics that you can then project forward as price becomes more information becomes available, and you have proper corrections of larger swings. You have other harmonics that evolve, and you can project all those forward to find even more confluence. I'm going to make it a point to do this more on my live streams, and I'm also going to make a point to show this more on the post-session review to add value and to commit these concepts to memory. This was a nice short sweet video. I believe it's packed of useful information for you. Again, like anything else, I hope it has value to you. Please post your questions, especially on the YouTube channel. If you want to post questions there, even better, so other people that may not be on Forex Factory can see it, or post them in both places if you have the time and inclination. That would be great as well. Thank you very much for your time, and tomorrow we'll get back on on the trading. Okay, thank you very much and have a good evening.